Hello and welcome back to Coffee Infused Crypto. Today, guys, we're gonna discuss Bitcoin. So please grab your cups of coffee, enjoy the show. If you're panicking, this episode is for you. If you're scared, this episode is for you. If you're doubting, this episode is for you. So I'm gonna show you on the short time frame and on the long time frame. We're gonna go back to yesterday, see how we performed from yesterday's video, what were our expectations, what did we get. So stick around and yeah, let's deep dive into Bitcoin. So as we discussed in yesterday's video, we clearly had this pattern, right? We had this triangle here at this area, right? And we said that we might go down back to the zero. Go back and watch it, and we were a little bit short from that area, if you notice. But again, we dipped below our triangle. We didn't even reach the 300 area, but we reclaimed the 200 weekly moving average, and this is clear by now. If you notice, we are here, so we're trading at this range. Top of the triangle, bottom of the triangle, and here we lost the first triangle. Notice how the support around this area, which flipped into resistance, the importance of supports and the resistances. So again, when we failed here, again, tried to support us, failed, and then jumped into this lower triangle. We lost our weekly parallel channel, but again, as I told you yesterday, I will wait till the end of the week to see that. And we dipped below it a couple of days earlier, so it's no big deal at the moment. So maybe we get back and get accepted and we break the 0.65 and then we can proceed. But before then, before we reach to that area, what did we do recently? We went down into this, where this trend line here is still acting as a resistance, right? The lower we go, the more it is still holding us. And this here validated this resistance even more with a couple of connections here, two connections here, one connection here, and another connection here. And we wicked to the lower part where we drew this trend line. And yeah, look at this, guys. Wicked below it and it held us, pushed us back above the 200 weekly moving average around this area. And yeah, here you go, the top of the resistance still resisting us. So we're gonna put this here now. Now we can know that we will be trading between this area, and we only have till maximum the 29th of May at 29th of May. Yeah, like we still have 2 days at max. We can break out at any moment from this, but up to 2 days from now, we will have a decisive move for Bitcoin. And 2 days from now, that would be by the end of the week. So this is a very important week close for Bitcoin. Okay, so again, if we broke to the upside, we are expecting a retracement or a push towards the 0.5 and this parallel channel. So for example, if I would want to trade this, for example, I'd wait for the break to the upside retest, and then this would be where I would just long this position, and I would take profit here and here, first and second target. That's an example of how would this analysis help. So again, knowing the targets and the levels are crucial. And yeah, this triangle didn't disappoint us. I mean, lovely bounce of our support, which we just pushed or put on the table yesterday, and here we are trading in this triangle. But should we be scared? Should we be afraid? No, but we should be cautious, okay? But always remember, the market will scare you. The market will be boring. It will annoy you. It will bore you, scare you, and do all sorts of things to you. And many people, it will shake out the weak hands. So if you have a proper risk management in play, and you know how to DCA in, and we are doing those episodes, how to dollar cost averaging. So you can DCA in your trades, you can DCA out of your trades, you can DCA in your spot, you can DCA out of your spot. So you're in good hands. Any dip to the downside is a buying opportunity. So why? Because to the downside, we have 25,200 still in play, the swing high here at this area, the swing high, and 24,654. But still, before that, we still have the zero, 25,798. That is a level to look for. And to the upside, I mean, yeah, being back in this parallel channel well opens a whole new level. So on the short term, we have to be, yeah, this chart this and look at it and monitor this. So any break in any direction, then that would be a trigger. Again, 200 weekly is not to be taken lightly. So this one has, yeah, is doing what it's intended to do, supporting us currently. And definitely this golden line here, this golden resistance currently, which acted as a support, is resisting us currently with this trend line from the triangle. So to know exactly what to expect on the broader, so technically when we are in doubt, we zoom out, we check. So as a matter of fact, we know we are at the 200 weekly, and not only that, we are at the 20 weekly. So 20 simple average. So to understand exactly, remember this chart where we have this parallel channel from the past all-time high. We discussed this earlier on our episodes, one of our episodes. So we have the zone which should act as a support and is acting as a support, and this zone is bottomed by this wick here from this massive candle. So exactly that's where we are, right? So that's exactly where we wicked. So what was once a resistance on the weekly, we go down, break to the upside, right? Can you see this? Come back down and retest. And currently we are so far successful. This wick here, we are so far successful, but definitely we need to see a bounce. Then we expect this level, right, to resist us. And again here we are trading within this triangle on this pattern where we can expect it to trade between those areas and then bam or bam. But to what direction do we have the higher probability? Of course, being currently we are in May of 2023, knowing that we're 7 months away from the Bitcoin halving, knowing that we just came out of a massive, huge bear market. So our probabilities are to the upside. But to keep it technical, we're gonna monitor the 20-week moving average. And we mentioned this before, and I want you to just look at this once again. Look at the 20-week moving average and look how does it, how do we handle the 20-week moving average? So this is in 2016. This is like on our road to the all-time high of 2017 at $19,700. Look the 20 and yeah, we mentioned that earlier, but I want you to see each and every week of those. This week, like boring weeks here, if you notice, and then going up, going back down, retesting 20, moving parabolically up, and then dumping all the way back down to 20. Even on this week, imagine the horrors of investors back then on August 2016. Imagine the horrors in this week alone. Bears were screaming, we're going back to 9K. No, it wasn't 9K back then, but they were screaming something. I'm 100% sure. So look at this. This week alone is it 26% down, but the week ended with us above the 20, and that was bullish at the end of the week. So expect a volatile market and expect us always coming back to the 20. But again, this 20 always acts as a support and we bounce back to it. Come up and down, bounce back to it. I mean, back from this like horror roller coaster, all the way up to this area. That was a 108%. And still, again, we managed to go down all the way from here and retest the 20, a 35% to the downside. Understand this, 35% to the downside in 2 weeks, retesting the 20. Okay, so even, and again push to the upside, 3 weeks of dumpage coming back to the 20, right? So again, what do we have here? Let's pull this all the way here. So yeah, so again here we had a move of 224%, but then came back and retested the 20 with a 38% dump. So this is the pattern. Okay, so the 20 weekly moving average, you understand it by now. We always come back, bounce, and when we lose it and retest it and fail, then yeah, we are in a bear market. Okay, so this is the 20-week moving average. And let me remove this arrow so that it doesn't stay here for so long. And then we move to current. Currently, even in the next bear below 20, and then yeah, this pump here, even then this is covered here. So but on our track to our last all-time high over 20, retesting 20. Yeah, so we don't want to lose the 20, and we are exactly right at the 20, and we have been below the 20 for a full bear market, right? For a full bear market, over a year of being below the 20. And recently we broke the 20 this week here. So look at it. I mean, right? We move away from the 20, wick, retest 20, then move up, come back down, retest 20. At this point, at the retest point, that's the last point where you want to sell anything. This would be the points where you buy. That's what history tells us, right? That's the point where you want to buy. That's the point where you want to buy. Why? Because of this. Why? Because of this, right? So if we fail this and retest, and then we see this weak rejection, then yes, that's the point where you want to sell, because we are testing it from the downside. So as long as we are coming back at it from the upside, that's where you want to buy. That's where you want to buy, because yeah, because that is what comes after retest. And we're gonna come back and see if this retest was successful. This week ended with a huge wick here. So if we zoom in now, so currently decent sized wick, though kind of doji candle within the zone, decent sized wick here. So we're gonna see how the week will close, and this is moving rapidly up, by the way. So we're gonna be retesting it until we just have something like this or something like this. So right, so this would be a fail on rejection. So always remember, the more we test something in a shorter period of time, the more probability it has to break. But this is on the weekly, so between here and here, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 2.5 months later, we come back and retest it. So we're gonna see if this week closed close to it, and the next week closed close to it. So we're kind of rapidly retesting it for twice or 3 times in a row. Then yeah, I mean, I would be concerned, because the price means that it's weak, and it's not having the impulsive move to the upside. So then we will have to check the strategy back then. But so far this is very normal. Look at the macro. This is very bullish. We're retesting the 20, and we have this as a resistance, which we are expecting, and that is currently at this week is at 29,000. So if we close this week over 29,000, and the next week that would be at 28,700. So the more we are in this range, the higher this is getting, and the lower the resistance is getting. Thus, a break is being closer and closer, and for me, a break to the upside is imminent. That's how things go. That's what history told us. So that's everything for today. I hope this gave you some hope to hold strong, to look at history, and yeah, to hold the ground. Never sell at this point. Always accumulate the dips. Buy. Those would be the best buys you do in history. And this is not a financial advice, of course. This is what I am doing. I tell you the facts, you do what you want to do. So stay safe. I will see you tomorrow. Stay crypto always. Bye bye.